What's up, everyone? Welcome back to Property Management Framebreakers. Today's episode is a special one. I'm sitting down with my longtime friend, mentor, and co-founder of JWB Real Estate Capital, Gregg Cohen. Now, if you don't know JWB, they've built what essentially looks like a Jim Collins case study for property management. They manage over 6,000 doors, operate with a team of 120 plus people, and have created what I truly believe is the gold standard for delivering a passive experience to rental property investors. I wanted to do this episode because I've watched Gregg build this machine from the inside out, and I wanted to vet what it really costs an operation to absorb all that chaos, all that firefighting on behalf of owners. Whether you're trying to scale your property management company with incredible humans, or you're trying to figure out where technology, like AI, actually fits into high-touch client service, Gregg's perspective on culture, expectations, and downside risks are just pure gold. All right, let's jump into my conversation with Gregg Cohen. Welcome to the Property Management Framebreakers podcast. I'm your host, Pablo Gonzalez, and I am here to introduce you to the folks in the property management space that have broken the frame of what you may believe was possible. This podcast is presented by Vendoroo. It is your all-in-one AI solution for resolving your maintenance needs. Let's go. This is a long time conversation of like me essentially vetting what I, wonder about kind of like the difficulty of like the operation that you guys have built and like a couple of different things. How do you make rental properties truly passive is kind of like the theme of this thing. I think some of that is expectations and whatever, but I do want to explore kind of like what is the most passive, right? Like how passive can it truly be?
Okay.
What are the type of expectations that to set for people, and talk about the idea of like isolating funds and all the things that you and me I think I've talked about a lot as far as kind of like the psychology of rental property investing is like the kind of like the first half of it. Second half of it, I'm just very curious about like the tests and tribulations of like you guys having grown to 6,000 doors and 120 people. And like, we talk about departmental, but then there was pod for a while. And I know there's a hybrid model out there. Just kind of like, what are the limitations of that type of stuff, right? Because at the end of the day, that allows me to just kind of like fill in the gaps in the back end of kind of like where I see AI changing the equation. And
Yeah.
I'm not trying to, there will be no gotcha moments, obviously, right? But like
Yeah.
I am trying to like sort through, my experience seeing you do this and the different messaging we've had, my experience as an investor and my experience seeing AI, and like what the real triangulation is of like where it
Yeah.
truly fits in, right?
That sounds great, man. I wanted just to see if there's things that I should stay away from. Is there anything that I say that is going to be like, oh man, that if I'm like, well, you know what, we just don't think we're ready to like outsource maintenance to AI right now, like because of all that.
I
I would
mean, I'm
assume.
not going to ask you that. First of all,
Like, what are the things that I should stay
you can
away
say whatever you want, bro. You can say whatever you want. Like to me, this is just you and me kind of like talking about business and property management and real estate investing.
from? Okay.
You
I
know?
love that. We should do
Yeah.
that more often.
Yeah, I agree. I agree. That's officially the beginning of this podcast.
Love
So
it.
I don't want to hear podcaster voice. I want to hear just Pablo and Gregg running in the morning voice.
Yeah, I mean, you're the hype guy. I'm just boring old Greg. I mean, whatever. I mean, that's all you get.
Boring
Boring
old
old.
GC. Boring old GC. I'm obviously going to post produce an intro to this, but all right. So let's just start there, man. You and me have had so many different conversations of like the intersection between expectations and owning outcomes and deliverables and the experience of rental property investing and what's real. And it's been a very like evolving thing, right? Like I go back to when we were first starting the Not Your Average Investor show, and my buddy Brian Rosenthal was, like liquidating his real estate portfolio, and him
Mhm.
just being like, I just there's pain in real estate. I don't want to do it anymore. I want to put in the Fortune 500 in the S&P 500 letter, right? I'm like, you're an idiot, man. Don't you know that there's like a totally passive way of doing this? And now we're 6 years later. I've definitely been through some ups and downs, and like I understand more of what he means, right? But like
Right.
I do believe that JWB has created the most passive way of actually owning rental properties, right? Not REITs, not funds, not whatever, being
Right.
like in full control of my rental property, the best experience possible. I still believe that to be true. But the question I want to know from you is, what is the upper limits of passive rental property investing? Like what is the most passive experience one could possibly have as a rental property investor with all the highs and lows?
I mean, the first thing that just came to my mind is a client call I just had yesterday. One of our clients, his name's Brian, and he's a client that owns 12 rental properties. And I hadn't talked to Brian in probably, I don't know, maybe 6 years now. And the conversation when I got to talk to him, at the end of the day, technically, I'm his property manager and he's a real estate investor. He is a rental property owner. But if you could have heard this conversation, it had nothing to do with property management or really real estate investing. I called him up because I said, "Hey, Brian, did you know that you're sitting on $2 million in equity in your portfolio? Like, let's celebrate this success, man." And that was 6 years ago we talked. Like, this is pretty awesome. And he went into detail about how the team has supported him and made this just a great experience. And then I said, "Okay, well, what are we going to do about this equity?" He's a savvy guy, and he said, "And I know I don't want that equity to sit dormant. I didn't know I had this much equity, but I don't want it to sit dormant. How do I get to a goal that he had? He said he wanted to get to about $330,000 of net income coming from his real estate portfolio.
A
And I
year,
said, "All right."
330,000 dollars a year of
Yeah.
income.
Yeah.
Sick. Okay.
And so we put this plan together and we're talking about harvesting equity and redeploying it and taking his portfolio from 12 properties to 30 properties. And so the reason I bring that up is because that's what's possible. Like, that is real. And, when people talk about passive income, it's a great misnomer. There's no way out there that like you do nothing and that just stuff just shows up, right? Like,
Yeah.
that's just not real. But there is a place where you are not the active contributor to that outcome happening on a daily basis. When you have a great property management team, that's possible. Brian has that. So he's not actively doing this, but you know, and it feels passive in that regard, but we're still actively thinking about how do we grow his portfolio to help him get to his outcome. So if we're talking about what are the upper limits of passive investing, like, Brian's a great example. That it is, he's got a team to handle everything for him. He's prepared. He knows that there's ups and downs. Brian's had evictions. Brian's had maintenance costs. He knows how it goes. And we're here to support when those things happen. But we're also keeping our eye on the prize here. It's this financial outcome. And those conversations that we have when it gets to planning, it's not about the little transactional like things that get most real estate investors bummed out about rental properties with their property managers. Brian has a property manager who's helping him reach $330,000 of income. And so that's the upper limits. And that's what I love to do. That's what we love to do at JWB.
Yeah, that's a super, like, I wonder, my head goes to, you answered it in outcome based, right? Which I think is where your head is at. And the place where my head really goes is that you just described the upper limits of how a property manager can be seen as a partner in a real estate investor's life as a true asset manager, portfolio builder. And that is a conversation that when I entered the property management space outside of the stuff that you and I have done at JWB is a hot topic, right? Like, it's like this idea of just like, we got to be more asset managers. The more that you're an asset manager, the more valuable you are to people. And I think that that's really, really true. And I've seen it firsthand in the way that, in these stories that you and I talk about, and in the way that you've built this operation. And that to me is the upper limits of what an outcome can be created, like the outcome that you can create for someone.
Yeah.
And I guess I asked the question wrong, because I was almost, I guess, searching for like, what is the most, when we say passive for the real estate investor,
Yep.
my head goes to, I think realistically speaking, I can have a world-class property manager like JWB, like right, like I think of the JWB model, obviously, right? I think of
Right.
a vertically integrated turnkey rental property provider that owns everything from the land acquisition to the construction on top of it, whether it's a remodel or build to rent, that
Yep.
owns the property management operation, that has a construction team that's reached a certain level of scale of purchasing power, that spends X amount of dollars per month. Therefore, you are a preferred vendor with everybody that's your vendor, and you're not like waiting to see when the cleaning crew can squeeze you in, even though it's been a week since, like the job was ready to be turned or whatever. Right.
Right.
And I think of an asset manager conversation that I have on a periodic basis, which is what
Hmm.
you just described with this guy, Brian, right?
Right.
Then I think of, okay, that is, that's the model I'm looking for, right? Like, because I've learned this. My lived experience is, I can expect to shell out a couple bucks, maybe like once a year per property, right? Like, and a couple
Yep.
bucks being somewhere from 200 bucks to 2,000 bucks. And then, if I'm working with a property manager that's really on top of it and maximizing for occupancy, I'm also thinking about, all right, I'm also going to have a turn every like 4 to 5 years as well per
Hmm.
property, and then distribute that risk around it. So from a passive standpoint, you know, every so often I'm going to have to make a financial decision on investing, but there's like a shorter time window of which I'm going to have to, have this experience where it's like, okay, now it's, something happened because there's human beings living in my house, and it's going to lead to a conversation that I'm going to have to explain to my wife, right?
Right.
Or like cut a check for, and that is always an experience where even with all the trust in the world, it's really hard to not have like oh, is this really what I need to be doing or not? Are they really on top of it? Right?
Is
So
it worth
like,
it? Yeah.
yeah, is
Is it
is
worth
is
it?
it worth it? Yeah, correct. So like from your standpoint of how you also, like obviously you also own 400 rental properties, right? So you see it from both sides of the equation.
Yeah.
Yeah, what is that? I mean, did I describe that accurately? Am I missing something there? Like how would you say, like, if your best friend was like, how much time and how much mind space do I need to like put to this, and like what am I signing up for, knowing that you're going to give me the best experience in the world? What
Yeah.
what's that experience look like?
I would tell him, and I do tell my friends and my family who think about investing in rental properties, I say, you have to be in a position where you can absorb some negative news and something that is going to piss you off, something that is going to trigger you. I mean, we all get triggered when there's a negative cash event. Nobody likes it. So that's going to happen in rental properties. It's not a matter of if, it's going to happen. Even if you have the best management team out there, it's going to happen. So you have to put yourself in that position and say, you know what, that's going to happen. Am I going to be okay with this? Can I stomach this? And the next question is, is it worth it? Well, for many investors, they don't understand the worth it part. So all they receive is you know, the negative part of the transaction. And the reason is because in rental properties, Bob's, you and I talk about this all the time, but the beautiful parts of rental properties are largely hidden from your bank account for a long time. So there's a lack of education. So, you know, where many people get into trouble in rental property investing is they are not prepared for the downside. And they have rosy colored glasses and they think that their property is going to always stay vacant and it's never going to have a maintenance expense and they're never going to have an output of capital. And that's just not real. So they go in with rosy colored glasses. And then they equally, and maybe more importantly, do not understand the upside. So when the negative happens, they're quick to bail. The worth it conversation, when we sit down, you and I, when we sit down in the not your average investor community and we see people's eyes open up and we see them asking better and better questions, we kind of see when it unlocks in people's minds and they're like, oh my gosh, I get the bigger picture now. I get all 5 profit centers. And when that happens, then the conversation becomes, for many people, it is worth it. Even though I know it's going to be painful at times, it is worth it. And so I think, that's a great place to get to. That's where I got to early on in my career. I own those rental properties, like you mentioned, hundreds of them. I know every pain point that a client has ever felt times 100. I mean, the cost of my property turns sometimes over 20 years of owning them and owning, 400 or 500 of them. It would blow your mind to see what I have spent on a property turn or an eviction. Like it's happened to me. But I have that other part of the equation, which is I see it. I know it. I've been doing this for 20 years, 20 years. I know what the other side and the worth it part of it, is very visible to me. And so that's what allows me to stay in the game.
Yeah. Yeah, and you said something that I want to dig into, right? Like you've experienced this pain yourself as a real estate investor, and you started this really young, right? I know now, like I know the end of the movie, right? Because I came in the final, like like in the victory lap kind of thing of like how awesome you guys are, right? But like I am really curious, and I know now that under promising and over delivering is so crucial to your ethos as a company, and I
Right.
want to get into the importance of that. But I would love to know, you started this at 24 in the right before the Great Recession. You obviously had rosy colored glasses on your way in.
Yeah.
At what point did you learn this idea of setting expectations as being so crucial to the sales process that you had to err on the side of under promising and over delivering as opposed to erring on the side of like, yeah, let's get into business, right? Like at what point did this become like, give me the story of like how this became codified for you guys.
It's a really interesting question. I wonder when that became codified for us. A couple things come to mind. I think it's just natural to underpromise and overdeliver for myself and for my business partners. So we were kind of like starting from a place of like the way that we try to treat each other and people.
You're a good boy. Good boy.
As you would say, I'm a good boy.
Oh,
I'm
good
a
boy.
good
Yeah.
boy.
Yeah. Yeah. I know there's definitely some like nature nurture that comes with this for sure, right?
Yeah,
But like also this is yeah,
I'm boring and I'm understated and
yeah,
like,
yeah,
so that plays into underpromising and over-delivering,
for
hopefully.
sure.
So I think there's just a natural part of who I am and who we are. But I remember when I put my business owner hat on, I haven't thought about this in a while, but I do remember early on realizing that when I understood the worth it part, when I fully understood the five profit centers and the ways that you can profit from real estate and how much money you can make as you stay in the game for a long period of time. And I looked at that equation and I looked with the fact that you can do this largely passively. You can hire a great team to serve you and support you. I looked at that investment and I was like, oh my gosh, here. Like, I also don't have to go and like say all of the amazing things that this thing is going to do and risk over promising and risk putting these really high return projections on there. Like, because this thing, it works even if you undersell it. Like it works even if you undersell all of the profit potential. You just got to understand you got to invest in the education because it's not very visible. You got to educate yourself and your client on it. So to me, I looked at it and I was like, all right, well, I already like to underpromise and overdeliver. I've got an asset here that I want to sell. When you compare it to other alternatives, it wins a lot. It wins over and over and over again. It's hard to share that sometimes. So even if I don't share the most amazing things, I'm still going to put my clients in a position where they're going to be really, really successful. And I don't have to set them up for failure. I can understate it. I can undersell it and it still wins. And then it sets people up for the future. So it was kind of like a calculation that I feel like I kind of stumbled upon and I was like, man, you know what? This just fits perfectly. I like to undersell things. I like to underpromise and overdeliver. It's hard to understand all the profit potential anyway. So I'm not going to put all of it on the pro forma
Mhm.
anyways. If
Yeah.
I know that there's going to be a lot of home price appreciation, I'm not going to put all of the potential home price appreciation that could be on there because when you run the pro forma in an understated or underselling type of a way, it still beats a lot of the alternatives. So yeah, I haven't thought about that in a while, but I do remember realizing that and saying, oh, now this is something that I love to sell because I can sell it the way that I want to.
So talk me through from that realization to building out a sales process that incorporates that, right? Like I know that, and there's a lot of stuff that you and I both know that if I don't state it out for whoever our friend that's listening right now, they will know. But you guys have like a 4 call sales process where you won't even show them a freaking property for 3 calls, right? Like,
Yeah.
and it's very like slow your roll. Let's get you on board. Let's do all this kind of stuff before even getting to the property because you've positioned yourself, like in this way. So talk me through kind of like, I know that that's the fully evolved thing, I assume that when you first started doing this, it was less evolved and kind of like you started incorporating this. So like if I was to put like my head, like my thinking cap on as a property manager right now, and I'm like, all right, man, I believe in the value of understating and I believe in the value of this kind of stuff. How do I start thinking about how I bring on a new client? And if you could do it from like the standpoint of a property management client, that'd be pretty interesting. But we can start with just the turnkey side of it if you want.
So kind of going into like how we started to originally build our sales process.
Yeah, like the
Yeah.
thinking of if I'm thinking I don't think anybody listening to us right now is going to be able to just like reverse engineer your sales process because
Right.
because nobody is a vertically integrated turnkey rental property provider. Right, but
Yeah.
like tell me about the thinking of like how do you start thinking of a sales process where you are, like what are the right expectations to set and how much do you want to slow somebody down to then set them up with like the good news and things of that stuff. Like
Yeah.
I know you're heady about this stuff.
Yeah. I try to keep it really simple. I mean, I'm not a classically trained sales person or a marketer or whatnot. A lot of what we have done at JWB for our sales process and our marketing is just come from shared experiences and learning and trying stuff and seeing how it works. But one of the things as I was developing our sales process early on that just made sense to me is that like, people don't like to be sold, but they like to buy stuff. And people, they show signs of when they're about to buy stuff. And you can kind of see it as a salesperson. And I always wanted to be on sales calls where people were as excited to be on the call with me or more excited to be on the call with me than the alternative. Because if it was the alternative, then I was just a salesman and I was just kind of like pulling them through the mud to get them to potentially hear my pitch, which they weren't going to buy anyways. So like one of the things we did early on is we were like, all right, so each one of these kind of like stops in this journey of client onboarding, is that client more excited or as excited to be on the phone with me as I am with them?
Mm.
And so we we would do this in a number of different ways. It would be, early on in the process, are we teaching something or are we sharing something that maybe the client isn't aware of? Can they walk away from that feeling like they got a ton of value just from that first interaction? Like that's a great way for them to be excited about showing up the next time,
Yeah.
And so like, what could we do in that first phone call to provide a lot of value and to have great customer service so that when I said, hey, you know what, let's go ahead and set up the next phone call, they've got their calendar out and they're like, yeah, this sounds great. Let's block an hour. Let's do this tomorrow. People don't do that unless you create a reason for them to be excited to be on the phone. So
Mm.
that was important. And through the different calls that we have, we try to bring that element to each one of those phone calls. There's a purpose, there's value that somebody's getting by being on that call, even if they don't do any business with JWB, and then part of the reasons that we have a multi-call process before we even go into properties is because we've been doing this long enough that if we go too quick into property selection, we are not doing a service to that client and we're not doing a service to our team as well, because the value of what we sell is this experience and the relationship, and having JWB serve you for 10 years or more. Those are the type of clients that we're looking for. Many real estate investors are very transactional, and that is okay. That's just not who we're looking for. So it's intentional to build the relationship so we can do the best job for the client. And it's also to see, does that client want what we want? Do they want to be a part of this type of relationship? And that's why we have a longer sales process than pretty much anybody else I know in the industry. And we've had it that way for 20 years.
Yeah.
So it leads to a better outcome for the client. It leads to a better outcome for the team. Our team loves our clients because they love the relationship. And then what it also does is it sets up those repeat sales to happen much more often and quicker because we invest the time on the front end.
Couple concepts that I think you just kind of ran through there is this idea of like having an educational slash disqualification sales process is like a super valuable piece to create lifetime value for the client, right? Like not, this idea of just kind of like if you can sift it out and only bring in ideal clients on the front end because you are making sure that they're aligned with what you're going to offer and you're setting them up to win. Also, you are taking it slow and creating that relationship that then flourishes into many, many more things on the back end. To me, is something that I think you just explained. I'm trying to think of this as if I'm a property manager that isn't a turnkey rental property provider, right?
Mhm.
I'm somebody that has a certain level of like accidental investors and, and some full-on real estate investors, right?
Mhm.
And I'm trying to take this approach. I've experienced that like property managers when they're first getting started, maybe the first 50, 100 doors, they're just trying to get in as many as they can. And then
Mhm.
they reach a certain level where they do like a culling. Right. And they're like, all right,
Yeah.
I got to fire these clients. I got to niche down into this type of person. And
Yeah.
and they go through that experience. Did you guys go through that experience or was it different because you guys were selling investment properties from the
It
beginning?
was different for us because we didn't open up our property management services to the general public
Yeah.
until probably 10 years in business. So
Hmm.
and we did this very intentionally. We would only allow clients to have our property management services if they bought properties with us. And you know now how intentional we are about the right type of relationship we would bring clients on board. So I am familiar with what you're talking about, the
Yeah.
culling, but we didn't do that. We didn't need to do that because by the time we were managing 1,500 homes, those were our clients that were, brought on the way that we want to, and that really served for those long-term benefits.
That makes sense. So talk me through the difference in like when you opened up to third party property management for something that you didn't sell to, like
Yeah.
tell me how you adjusted that sales process. What does that sales process look like? Because I haven't been through that.
Oh, yeah. Well, that's a very different sales process than if you're a turnkey client. I would say it's different. The same elements are what we're looking for, relationship, right? But it's not as complicated of a sale. So it doesn't need to be 4 phone calls,
Hmm.
right? People aren't spending $200,000 to $300,000 on a property with us when they're hiring us as a property manager. But it is important for us to probably go slower than I would say most property managers out there.
Hmm.
So I think it's either 2 or 3 phone calls that we have by the time that we have an introductory phone call to the time when the property management agreement is signed. That is there, those same elements apply though. We want to look for that type of a relationship. We want somebody to be as excited to talk to us as we are to them.
What
Many
do you
times,
teach on those calls? Like, are you teaching the five profit centers? Like, hey, is that what you lead with? What are you teaching to get them to be excited about the next call?
no, we're not teaching about the 5 profit centers typically on an intro call for property management client. A lot of times there's just a lot of things you can teach about your local market. So a lot of times it's a local investor. So they're
Hmm.
more interested in the Jacksonville market. So they might not know all these great things about the Jacksonville market or about the neighborhood that their property is in. And so we can share information with them that they can't get anywhere else because we manage almost 6,000 properties here in Northeast Florida. So they might say, well, I think my property is going to rent for this. Well, let me tell you about this. This is what's actually coming to downtown Jacksonville. Did you know what happens to your rents and median incomes and jobs
Hmm.
over a very short period of time because you are situated in this neighborhood, which is right next to downtown Jacksonville, and we, there's a $2 billion development. Those types of conversations can happen. I think even more granularly, though, they might say, well, I think my rent today is X. And we can say, you know what? We manage 17 homes in a quarter-mile radius to you right now. Let's take a look and see what rents are actually happening here. This is like the best rental MLS. MLS stands for multiple listing service, right? It is like the best data source if you are thinking about renting a property in Northeast Florida because we are actively doing this all day, every day for those 6,000 properties. So there's a lot of things that we can just give a ton of value for to that client in the beginning and just to have them look at us as a wonderful resource more than just somebody to collect rent. And hopefully in the first conversation or two that happens. And of course, there's a lot of information to go through property management agreement wise, the management fees and tenant placement fees and things like that. So it's probably the first couple of conversations, and 2 or 3 conversations. That's when we get the agreement signed and we're off to the races.
Yeah, that's interesting. Like if I'm putting my friend that's listening to to this conversation hat on, I'm thinking, okay, cool. So the key is how can I either aggregate data or that I can then show off that I've like done the work to have this like specific data that's really valuable to them. Aggregate access to like information that's coming, right? Like so interesting, the cocktail party conversation tidbits of
Yeah.
like what's coming to the city and what's happening around town. Or if I don't have any of those things, at the very least, I can show them, this is my process for calculating these things so that we're not just like, hey, Zillow says this, but like, this is how I estimate things. So like, yeah, let's run your filter through my filter. And it almost it goes back to kind of like something that Christopher Lockett says, this idea of like content about the content is the most interesting content. You can
Yeah,
give somebody what their rent number could be, or you can show them how you would go about calculating their rent number.
that's a
You
cool
know,
thing.
and
Yeah,
that's something that's like, oh, these people are thinking about it. There's value here, right?
I think I think those are two really good things. If you don't have those things at the ready, maybe you're a property manager who hasn't reached that level of scale yet.
Hmm.
Anything to show your level of expertise. I mean, for a property managers are a dime a dozen. You have to stand out and communicate that you are an expert. You are the best and most worthy person or company to manage this home for somebody. And a lot of times being the expert is what people want. So you could do things like having your KPIs, your key performance indicators at the ready.
Hmm.
And hopefully you have some really good KPIs for your company. You could just educate. Hey, listen, did you know that the average maintenance turn takes, 10 days in this industry? And that's the number one reason why tenants decide to leave. And you don't want tenants to leave because then that leads to higher property turns. Our average maintenance days is 6.3. Let me tell you the six KPIs that really matter, and you could have those at the ready and really help to distinguish yourself. Really, I think every property manager out there has something that can distinguish themselves and help people understand that they are the expert.
Yeah,
It's up to you to go figure out what that is, make it very easy for the person on the other side to understand it in a very short phone call.
I like that. I like that. That's good. What do you, when you are, what are the upper limits of like what you can actually promise to deliver, right? Like, so there's this idea of create as good of an experience as possible. I think you guys, what you've done very well, you and your partners and your team, is you've been able to control the outcome at the highest level possible in property management, right? Like we talk about this on the show. You don't just drive outcomes inside the property lines. You've now like graduated into like tipping the scale on macroeconomic outcomes in the local economy to a certain extent in order to do this thing, right? If you're thinking about controlling the outcome for a real estate investor, you can't control what, like you can't control the day to day of what people are going to do inside of the house, right?
Right.
Like impossible. Or, right? Like how do you think about the things that you can control, right? Like I'll give you
Uh,
like what I'm thinking is as I'm asking you this question, I'm like, all right, well, you guys, and I repeat this all the time. I've now copied this in like my other unit, right? That I have, like making sure that when you do a turn, that you update the property to have like the surfaces have high durability, ease of maintenance, right?
right.
Like that's something I'll never forget in a way of like, okay, this is my way of controlling, like the downside of like something going wrong in this house
Hmm.
or making sure that there's no delayed maintenance, right? Like, can you talk me through kind of like what you think your control points are? Another one that I think you guys do is 3-year leases, 2-year leases, right?
Yes.
Like that's another version of controlling the outcome because you are now maximizing for
Hmm.
longevity and you've put in a lot of work into being able to sign a 2 and 3 year lease when people told you that that was impossible.
Hmm.
I guess, expand on that for me a little bit. If you think there's other places where this applies to and like what you can control on the front end that you put extra work in, or if I've kind of like nailed it there, you can just kind of give me how you think about this idea of like doing the work on the front end so that you're maximizing these outcomes on the back end.
Yeah, I think there's a little bit more to add on controlling and maximizing what we can control. Can't control everything, but I would say you can engineer things to a very high degree to achieve the success that you want for your clients. And so I think we do that. So you pointed out some great examples. Signing multi-year leases started with the end in mind. It was me and my business partners as 20 somethings owning rental properties and looking at what pissed us off the most. When were we the angriest with our rental property portfolio? It was when tenants would leave, and it was because there would be, a $5,000 to $8,000 outlay of costs when you totaled it all up between a new tenant placement fee and between, a couple months of lost rent and between putting money into the rental property. I was like, I don't want to do this. How can I delay this as long as possible? And so we became the very first property management company here locally to sign multi-year leases, 2 and 3 year leases. In fact, a lot of people told us that it wasn't possible, that it was illegal to do that when we started to do that 15 years ago now. Of course, that was never the case. And now many other people sign longer term leases. So that's one way of doing it. One other thing, though, I did want to bring up, we engineer a lot when it comes to insurance, when it comes to financing, even when it comes to property taxes. There's things that we can engineer to have a better outcome. Like on property taxes, you can dispute property taxes. And, and for an insurance provider, you can work with a company that has your client's best interest at heart and reshops their policies for them proactively. So like, these are all things that we can do for our clients because we are engineering the outcome that we want. But you can't do it all. At some point, it's not going to go according to plan. And this is where reserves come in play for clients. I know that if a client just stays in the game with me for 10 years for their properties, they are going to be massively successful. I just know it because I've never seen the opposite. And I have a lot of clients and they're all over, many of them are over 10 years. And I've just never seen somebody who's been in the game for 10 years not be successful in rental properties. So I know if I can just keep them in the game for 10 years, we're going to have massive success together. And I can't control if somebody's going to leave early or if they're going to destroy the house. I mean, that does happen on occasion. But what I can control is them not having to pull money out of their personal bank account to go and pay for it. Because that's where people get pissed off and they have tough conversations with their spouses and they start to question, is it worth it? It's when you're unprepared for a big cash outlay. So the last thing to do to control or maybe engineer this for success is to work with clients to make sure that they have property reserves in place for a rainy day. Because what I have seen, it's not so much about the outflow of capital, it's the unexpected outflow of capital that's tied to your personal bank account that you're spending money on in other places. If it comes from there, people are going to be pissed off. So we work really hard to prepare our clients in advance to have that property reserve bank account set up and to prepare them that you are going to dip into this at points along the way. And it's okay because the bigger picture is over time, you're making hundreds of thousands of dollars and it's okay to go negative $3,000 if you're making hundreds of thousands of dollars. So that's one more thing that I think is really critical to engineer that type of client experience that you want.
I'm glad you brought up reserves because I want to go down this rabbit hole a little bit because I feel like me and you who used to religiously run every Tuesday and Thursday, and now we do it every once in a while. On many of these like 5 a.m. runs, we've had this conversation of if people can just separate their bank account, like if they can just put the real estate bank account, right? Like the rental property bank account with X of reserves where the cash flows go into that and come out of that and never touch the I pay my credit card bill account with that same amount of cash. I have been led to believe that you think that that's like one of the most high value activities that you can get a client to do. How successful have you been with that? Like what's your track record on like actually talking, because we've talked about it for a while. I still have my stuff somewhat commingled. But I'm lazier than most people. So I'm curious about like your track record with getting people to like completely sequester the bank account there and the difference in success rates based on those people.
I'm a numbers guy. When I get asked a question like that, I'd like to have some solid data to share with you, and I don't. It'd be really hard to do that. I'd say we do a lot of coaching on it. Yeah. I'd say, on the phone call where we're coaching the client on it right after they close their property, they're like, yes, that makes sense. That sounds good. Now the follow-up and do they actually do it the way that I would tell them to do it, which is set up that separate bank account. All of your rental income goes into that bank account. All of your expenses go out of that bank account, but stock it with appropriate reserves right off the bat and then don't touch it. I don't know. I couldn't tell you how successful. I can tell you that when there is a client issue, the first thing I do is I go and I look at their client ROI report, which is a JWB reporting tool that shows the big picture. How much money have we made this client? What is their return on investment? And there are times when there's a client who is upset. And when that happens, and I go and I look at their client ROI report, almost without exception, they have made a ton of money with their rental property portfolio. And they're also mad at this moment. When I see that, I can almost guarantee you they do not have that property reserves account set up the way they should. Because if they did, it would be easier for them to see the bigger picture. So I think it is something that we constantly strive to do because I do believe that is a very important part of the client experience. We have gotten more and more vocal with it over the last probably 5 to 10 years than we were for the first 10. And some people probably tell us that they're going to do it. And then I don't know if they actually execute, but it's something that I wish everybody would.
It's worked out nicely for me to semi do that, right? Like for me, like the seeing that money come in, right? Like I just see my savings account. Like I essentially just have, instead of in my checking account, I have my mortgages and cash flow going into my savings account.
Okay.
And that savings account has my reserves, right? Which I'll just say it, right? Like my wife and I earmarked 24K in reserves.
Mm-hmm.
We then took like 30K and put it in like a 4% interest rate kind of like savings account. And then we
Yep.
have another pile of cash that's also in that other savings account that is, you know, like for different things that we think about. And I, for me, the last 2 years, just watching that sucker grow has
Yeah.
has been amazing, right? Because I don't remember as much like me being like, okay, I made this much this month, and now I'm moving
Right.
it over to savings, as much as just like that thing has just kind of grown by itself, and it's really made a very palatable experience right now that I have like two $12,000 turns happening.
Right.
It's like
It
about as
rains.
palatable as you can make that, right?
Yeah.
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 So
Well,
yeah,
so,
and yeah, go.
well, I was just curious, like, what aren't you doing that I would have suggested you do? It sounds like you set it up the way
I,
that I would have
I
suggested.
think if I would have been true to the game, I would have just put the 24K in that account
Uh-huh.
without any other extra. And like when my income exceeds my expenses on any given month, I would be transferring that extra to a different bank account, not that same bank account
Oh,
from my active income. Right. Like right now I have it. So like when me and Marta, like we make X over the month, some months we take a bunch of money and put it into savings. Some months we
yeah.
take very little money and put it into savings. Right.
Yeah.
And it works out definitely in the positive, but like it's going into that same account that is also going positive with
Ah, I see.
the
Now I see.
cash flow
Yeah.
from real estate
You know,
versus,
what you really want is an easy to understand scorecard for yourself or for
yeah.
anybody who's in rental properties. And one of the easiest ways is just to have that separate bank account. And that's really
Yeah.
what it is because you're never going to remember all the good times. You're only going
Yeah.
to remember when you have a really hard turn. And so
Yeah.
if you just put, you know, I tell people to put $5,000 per rental property in an
Mhm.
account. So if you
Yeah.
got 3 rental properties, have 15 grand in that account. And then what you'll see is it'll go up, go up, go up while the homes are rented. And then when something negative happens, like you're going through right now, Pobs, it comes back
Yeah.
down. But more often than not, it's higher than 15 grand. And so if you just keep that scorecard for yourself, it helps to make those times more palatable.
Yeah. That's interesting because we ended up coming up with 24 and we own 5 property, right? Like I live in one of them, right? But like, it's pretty similar to that. And the truth is, I feel like I'm going through almost worst case scenario of like two expensive turns at the same time is so unlikely.
Right.
And I was still able to make it through, right?
There you
Like,
go.
so yeah, that's
Yep.
interesting. All right. I want to take a hard shift here. You guys, like actually the last newsletter I published, I talked about if everybody's selling you like an AI teammate, does your teammate need to have culture? And within that, I used JWB as an example of how you build a culture, right? Like it's a video of Melissa explaining the TMM and me talking about it and all this good stuff. I am not shy about describing like an experience of working with JWB akin to going to an In-N-Out on the West Coast or a Chick-fil-A on the East Coast. And it's like you walk into this place and you're like, why is everybody so happy and so friendly and so helpful? Right. So like you guys have invested a ton into team, right? Like I don't want to break down how you did that. I'm validating the fact that that's real. You guys have world-class perform. They're all like ex-college athletes and like ex-high school presidents and whatever, right? Like it's
Yeah.
super clear that that's what you guys have in your business. I've also seen you since I've been involved, right, grow from around like 60 people to like north of 120 and go through multiple different ways of organizing your hierarchy in order to like serve the needs of the rental property investor and also not burn your team out, right? Like I've seen departmental, I've seen pod. I'm not exactly sure exactly where you stand with it right now, but I would love to get into a conversation around how hard it is to scale with a human team and serve all these different stakeholders and all the complexities of property management. Because as I told you, I want to validate my thoughts on like the value of the AI thing and all these different things. So I just said a lot, man.
Yeah, no, it's really hard. I mean, it's hard to build a culture when you're just starting, when you're a small business, and as we've gotten into medium business. I mean, I don't know, it's kind of like raising kids, right? Like in the beginning with my kids, when they were just born, I was like, this is the hardest thing ever. And now my kids are 14 and 12, and it's 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 beautiful and it's still hard, but it's just a different type of hard. That's kind of what I would say building a culture is for a business when you're starting up versus small business to a medium sized business. It's hard everywhere. It takes a intentionality and an investment and making a lot of decisions that are very long term, but it's a little bit different as you go through those different phases. When as we have grown and we now have 120 something teammates here at JWB, what we have learned is that my impact or my business partner's impact on the organization has become a lot less. And that doesn't mean we're not here every day. We're here every day. We're in it, but we do not drive the culture anymore. And in the beginning, it was all of us driving the culture. And so those decisions that we made to bring leaders up many times through our organization was through the lens of, are these the folks that we want driving the next iteration of JWB's culture? And luckily, we have some incredible leaders on our team who are really driving that culture. So I think that was the biggest change. But you know what? It's hard. It takes an investment to do it, which is uncomfortable as you're growing as a business. Any other company might look at your books and say, I can't believe you're spending this amount of dollars on a chef at your office, or that you're shutting down your office for days during the year to go out and volunteer together as a team. Anybody else on the outside would look into that and be like, I can't believe you're doing that expense. But you have to have a different lens. And we always look at that as an investment. But it's not easy. And it never is easy, in my opinion.
Looking at a line item like having a chef and paying for company lunches and shutting down for culture days and going and volunteering
Yeah.
and that being a really worthwhile expense. To me, when I think about the investment in culture, and it's how I wrote it in this like newsletter, right? It's we talk a lot in Vendoroo about how do we just make it so the property manager just has to control the endpoints, right?
Mhm.
Like, what are the endpoints? The endpoints is the vendor accepting an order, right? Like the vendor actually, like accepting a work order and showing up.
Mhm.
An endpoint is how you talk to, like how your team fields a phone call from like a angry resident or a, skeptical owner kind
Mhm.
of thing, right? And like to me, the investment in culture is what you just described, right? It's like as your organization grows, the owner of the company has less and less control over the endpoints. The best chance they have at controlling endpoints is investing in a culture where people are all marching to the same beat. You know what treating people looks like. You know what the experience is going to feel like on the other side of it. How am I doing there?
Yeah, I like that, controlling the endpoints.
Yeah.
I think that resonates.
So talk to me about like what I'm most curious about that I've never talked to any about is like how does the control of the endpoints like what with this like belief on like control of endpoints, how do you think about the evolution of like portfolio property management, departmental property management, pod structure property management, and like what are the goals as you have like experimented with all these different types of structures, like what are you hoping to achieve, like what are the nuances of like difficulty in relation to how it feels at the endpoint level?
Man, we've experimented many, many different ways when it came to how we're going to be serving clients. It was one of the things that we realized as we got
Mhm.
to a bigger scale. There's so much value for the client that comes with operating at a bigger scale. But none of that really matters unless the client feels like they have that person who has their back. And throughout different times with JWB, it's just a natural thing. Sometimes people would leave. And in the beginning, it was Lauren Alleman, who is our director of sales and service. She was the person who handled all 100 clients initially, and she's amazing. She's one of our key leaders on our
Superstar.
team. Yeah,
Absolute superstar. Yeah.
and she's been with us for well over a decade,
Yeah.
and so that it was easy to have that standard because it was only one Lauren, and Lauren is here and is, has been a part of our team for forever. As we grew and we hired really wonderful people, but people would leave organically. It happens to every company. It was hard to replace that "we've got your back" feel with that one person. And so then that's where our ideas for the pod structure started to come into play. How could we have a small team that would have the feeling for a client that we have their back, that the knowledge transfer is there, that it would be somebody who's an advocate for them, who knew more than just general customer service to serve those folks. And there were pros and cons to that as well. We're evolving now. We evolve when we see an opportunity to do a little bit better. So
Yeah.
I don't think we've exactly nailed it. I think one of the things that gets thrown out as you go from a small company to a big company, whether it's real or not, it's just a kind of low-hanging fruit for people to say is, "Oh, you're too big now to care.
Yeah.
You're too big now to care." And we really push hard against that because we care a lot. And we have to fight against that narrative because it's not just caring. Now it's just proving beyond the shadow of a doubt that we care and that we structure the team and the support and the services to have the client feel that care. Because I do think it's very easy to just say, "Oh, the company is 120 people now," or, "Oh, they manage 6,000 properties. They probably don't care enough about mine because I only have one." And we really, really, really use that as an opportunity to strive so that no client feels that way. We're not perfect, but we are constantly looking at how can we have that balance of having a client take advantage of a company with the type of scale that we have, but also make it feel just like it was Lauren Alleman serving those first 100 clients, and we'll continue to evolve.
So talk to me about what was the promise of the pod structure when you guys evaluated it, and then now you're evolving, right? So I assume you evaluated the pod structure, there was a promise to it, you fulfilled some of that promise for yourself, but it wasn't everything. Like what, like something must have fallen short. Kind of like what was the promise of the pod structure that made you want to do it? Obviously, starting with is like consistency with the client. And if somebody leaves, at least there's two other people that like I know that I feel know me that can
Mhm.
step in. What were the unforeseen challenges in the pod structure that didn't make it a silver bullet?
So it solved one problem, which was there's a small team. So if one of our teammates happened to leave, there were three other people in the pod that were a welcome named face and knew a lot about that client's portfolio. Where it didn't exactly nail it was within the pod structure, there were very specific roles for each of the JWB teammates in the pod.
Mhm.
And so it didn't nail it in the sense that we need to think bigger than just the one activity that we need to do. And so within the pod structure, if you have four people and you break up the roles and your job is only to focus on this one element, handling the maintenance or, renewals or whatnot, we got to think bigger picture. And so what we looked at is we said, you know what, it's the way that we did that, it might have been leading to a place where we're way too specialized and we're missing the bigger picture sometimes. So it's constantly evolving. And, we're actually in the midst of rolling out some tweaks to that pod structure as we're talking about today. And
Mhm.
so our leadership is working through that. And it's something
Are you
that
able to take me behind the scenes on that, or is that too like
I'm
fresh?
actually not even, I'm actually not even a part of that conversation.
That's fair. That's fair.
We can go back to my impact on the day to day is a lot
Yeah,
less now.
yeah, yeah, yeah.
Um,
Yeah.
yeah, actually, I don't even know.
Yeah, that's interesting, man. Because I think in going back to the theme of this episode of like how passive can rental properties be, something that we're not talking about is that you, sir, has made it as a business owner about as passive as it could possibly be, right? Like you and your partners, I talk about this all the time, like a magical feat of entrepreneurship, but like the four of you guys who are the top leadership disappear for one full day every single week to spend time with each other and think about long-term things. Once a quarter, you guys do that with your management team as well. And then once a year, you do that like for multiple weeks of business planning as well, right? So like you
Yeah.
guys really have reached this like mythical level of like entrepreneurship where you went from being a small business to now a business where you really can pull yourself out of the weeds and have a passive ownership of it about as much as you can as like a business owner, right?
Yeah. It starts with really great people,
Yeah.
and it goes back to culture, and it
Yeah.
goes back to bringing the right type of people and finding the right people with the right seat on the bus.
Yeah.
And, you know, our key leaders today have been with us for many times, over a decade. And they've kind of planted their flag with JWB, and they believe at a very deep level of the mission of JWB. And we are really, really blessed to have our key leaders in place. There was an intentionality for us between the four of us that we wanted to grow a company like this that would be led by others beyond ourselves. We realized that if it was just the four of us, we could not accomplish the big goals that we wanted to do. We had to get good at growing talent, and we
Yeah.
wanted to find talent that not just reflected the core values that we had and that we wanted for the company, that we're going to elevate those, that we're going to take it to another level. And so, yes, we do. We do everything that you just said there. We step, first of all, in the day-to-day now, very, very few decisions, if any, are made by the four owners of JWB. I would say 99% of decisions are made by others on the team on the day-to-day. We
Mhm.
leave, we leave the office routinely, and we go and we separate ourselves from what's going on in the business to go and work on the business, whether that's weekly, monthly, quarterly. We're doing that. Sometimes it's the four of us, sometimes it's us with our leadership team. And then our leadership team is doing the same thing. They are working on the business with themselves as a peer group. Our directors are doing that. And then our managers and our supervisors as well. So, and it leads to a business that is just way, way better than it could have ever have been if it was just the four of us.
I think it's yeah, you know that I totally look up to and you're like my hero in this regard, right? Like I think it's incredible like what you guys have accomplished. And I think the mission thing is really real, right? Like the more that I'm a part of that mission, the more I want to be a part of that mission just as like an outside contractor to the space just based on all of it. I'd love to end on a full transparency question of before this you're like, "Hey man, what do you not want me to say? Like I know like we don't think we're ready to use AI maintenance, blah," right? Like so leave that behind. Doesn't matter what you say here. What needs to be true? Like what needs to be true for you guys to start giving, like AI real teammate responsibilities that are handling things as sensitive as maintenance or, client interactions kinds of things. Like what is the thing as somebody that's as meticulous as an operator that has built the thing that everybody wants to build. Like, people are running to AI to accomplish what you've accomplished, to like get out of the weeds, to be able to like recruit great people, right? Like for someone who's already there, talk me through like what needs to be true for it to happen.
With when I'm going into the AI conversation now, I don't think so much about the massive upside because I believe it and it's there and I know it's there and more of the decision making for me and I think us here at JWB is more about how do we limit the downside risk of it. So,
How do we
like,
limit the downside risk of AI, not how does AI limit my downside?
correct. Yeah, the downside risk of bringing AI into our daily activities for JWB.
Mhm.
I think a lot of the pain points for us in really any type of AI conversation comes back to our team and our culture in the sense that, with us managing about 6,000 rental properties and serving thousands of clients and having 120 teammates, if we introduce the latest technology and it's a flop,
Yeah.
we risk. I mean, we have 1,000 new people that want to rent a home with us every single week. That's probably 1,400 phone calls
Yeah.
a week that come into our office. If we were to implement AI and it says something that's just not, it says something wrong in the housing, you can't do that,
Yeah.
or because it's very sensitive and regulated, or if it's just not the level of service that we want to do, I mean, it has really wide-ranging negative effects for us. And then I think there's that from a client or resident experience. But then if we did adopt it and it rearranged activities of teammates here in JW and didn't work, well, then that really upsets the apple cart here too and leads to culture disruptions and things of that nature. So I think more about, I know the technology is amazing and will change and can change and has changed certain elements of JWB when I'm thinking about AI. But in a lot of the decisions I'm trying to solve for, how do I preserve the team, the culture, our customer service standards when it comes to the downside risk of AI. And I think that is heavily on our minds.
Yeah, that makes sense. And that makes sense why like the questions you ask, right? Like I like, if I may, and I can always edit this out, but you're like when we're talking about would you ever use Vendoroo, you're like there has to be like you can't be the only one doing it because if we go all in on it and it fails, we have to have a backup option.
Yeah.
And that's like that limited downside thing that you're talking about, right? Like if you're gonna
Yeah.
disrupt the apple cart and do that type of stuff. I wonder where do you see the because in my head, this idea of what the pod solves for to me is what we're solving for, right? Like how can you create a second brain that centralizes all the decision making to make the decisions in the right way, right? Like I should probably send you the newsletter I wrote last week.
Yeah.
Um,
Love to see it, man. Include me on all your newsletters, man.
yeah, I don't know why that doesn't happen. I guess maybe
I
I'm
mean, I
just the
like
worst
your
marketer in the
newsletters. I
world.
read them
You're
all the
only my
time.
dream customer.
Yes. You should send me, do you send it to Melissa too?
No, I don't know. I think we only send it to people that have like interacted with us from like have come in our marketing pipeline. You guys came in a very different way.
You should definitely not include Melissa in there. Definitely not. Yeah, that would be really dumb.
So funny, man. Yeah, man. I see it as this idea, like to me, it is mitigating for like the thing that you're trying to mitigate with the pod structure, right? Like and the culture piece without needing as many people to do it, kind of thing, right? Like if you can not just automate a workflow, but create a central repository of context and decision making and how to treat people, it does that, right? Like so it's an interesting thing where it'll go, man. I'll tell you, to me, the thing that worries me is exactly what you're saying, is like the companies that are doing it the best today have the most to lose and therefore, inevitably will be the last ones to adopt. And I think that was like how we started our conversation about it early on when I got involved with Underpromising, right? Like, but I don't
Walk me through,
know. I don't think there's a right answer either.
well, walk me through what you just said there. So the companies that are doing it the best today, so like Vendoroo, doing it the
No,
best today.
like the property management companies doing it the
Oh,
best, right? So JWB, you
uh-huh.
figured it out with people,
Yeah, gotcha. That makes
you
sense.
know, and you have like a high standard with people. So it's like
Yeah,
I
we have the
see it
most to
across our
lose.
customer ecosystem. It's like the people in the most pain are willing to like try this like newer stuff, the
Yeah,
easiest. Now we have this like second wave of people that are really getting it based on our receipts, but like, I don't know anybody that has like the people that I know that like operate anywhere close to the scale that you guys operate
yeah.
with the investment in like the people capital, anywhere close to the investment in the people capital, none of those have made the shift.
That's interesting. I mean, it makes sense, man. To me, it's like if there was an easy onboard, offboard opportunity. So to me, there's two things. It would be nice if there is another provider who we could trust, like you guys, that could do it, like another option. If there were three options out there, that would give, I think, companies like us, we would feel less risky about it. But I
Mm-hmm.
also think just like if we were to adopt it and like, please edit this part out, but like
Mm-hmm.
if we would adopt it or you can edit it or not, I don't care actually. If we would adopt it, the purpose for doing this is that it would eliminate positions,
Yeah. Yeah.
right? Which, that is a value for doing this. So clearly recognized, but to like eliminating positions and then it not working and then having to rehire those positions is like a culture killer. Like eliminating positions is tough for culture anyways, but like it not working and having be onboarded, offboarded or whatnot, it's just, I don't know, scary.
Yeah. I mean, you don't have to convince me of how scared you are of that when my biggest lesson as an entrepreneur came at the end of 2020, beginning of 2021, when you're selling properties like gangbusters. Our
Yeah.
funnel is so full that you can't close on all of them. Me and my business partner at the time are telling you, hire some more salespeople because this is the time to make it in. You're like, I'm willing to leave money on the table in order to not fire people later.
Yeah.
in order to not kill the culture, right? So like to me, like it's so genuine coming from you because I've seen you not do it. I've seen you do this from a place of not greed as opposed to a place of fear, which is very, very real to me.
Appreciate you saying that, man. That's you nailed it there.
Yeah, yeah. And I think this is a good ending point, man. I could talk to you about this a bunch. Can we do this like periodically? Like just Greg telling me about property management business
Sure.
practices?
Yeah.
Deal. Deal.
Yeah.
All right, buddy.
You let me know, bro. I
All
just
right.
want to hang out with you all the time, man. You know that. If I don't get to
Perfect.
run with you anymore, so I mean, I guess it's the next best thing.
If there's one thing that I want people, like somebody that's listening to this, to do, is to go and learn from the school of how Greg does business and how JWB does business and how you and your partners have built out what essentially looks like a freaking Jim Collins case study for the Harvard Business Review of a business. So like I think that we just scratched the surface today, man. I appreciate this and I want to keep doing this because I want to for everything that I do of like extolling the values of like what Vendoroo can do for it, I think one of the best things I can do for people is expose them to the JWB way, man. So thanks for being on.
Love that, man. Dude, thank you for saying all that, brother. Love you too. Let's do
All
it
right,
again
buddy.
soon.